story is that FMCG is the only sector in the green. VIX has shot up to 1.5-year high, and mid cap and small caps are also giving way. So some kind of a expected weakness is setting in into the market. Seshadri Sen is now joining us from Emkay Global. Seshadri, what are the range of outcomes? I mean, I'm with a caveat that this is a very short-term factor which we are talking about, a month or two. In the long-term investing framework, elections may not play a very large role. But in the near term, what all range of factors and the implications are possible in your view?
Yeah, hi Ajay. Thanks for hosting me on the show. And you're absolutely right. I think if you take more than a 3 to 6 month view, then the elections will not be that relevant. In the short term, there are probably two possible outcomes. One is that the results are in line with the exit polls. In which case, I think the market will continue to be strong, but there won't be major up move. And the next trigger, which will be the union budget in the first fortnight of July. I don't think, if the results are in line with the exit poll, there'll be any major move in either direction. On the other hand, if there is a negative surprise to the exit poll, and the BJP and the NDA come back, but with numbers that are not as strong as the exit poll suggested, then there could be a correction, but that correction would be short term in nature. Ultimately, the NDA returning to power is good enough, and as and when political developments are seen, the market would bounce back in a fairly short period of time. And once the budget comes in, all these fears will be put to rest. These are the two sort of A and B outcomes that we're looking at as far as the elections are concerned.
Shadri, let's look beyond here and now a bit and talk about structural stories, which if are available 20-30% lower or even higher in any kind of a outcome which the market may not like for the short term. Do you find high earnings structurally, the visibility very good management? Only valuation is something which was holding your hand, and if it is provided for any reason, you will take advantage of getting in.
Well, we continue to favor manufacturing as a theme. Now, that's a wide swathe, I admit. Within that, I think industrials is probably our favorite as a fundamental bottom-up sector. But one has to be careful in that sector because many sub-sectors there are trading at very elevated multiples. You probably have to wait for a bit of time correction on that before you re-enter as far as industrials are concerned. Consumer discretionary is another, some parts of consumer discretionary is another segment that we like. Autos and auto ancillaries for sure is another sector that we will keep an eye out on, either hunt for stocks which are not elevated, in terms of multiples, or wait for time correction for the better quality names, which may be at this point in time looking a little rich on the valuation side. We also, so the FMCG is an interesting one where, in the beginning of the year, we had sort of said that maybe the mass consumption and rural spending turnaround would happen sometime during CY24. These results are a good sign. We don't think that there is a sign for a full turnaround at this stage. We want to see it a little more. But that sector looks interesting, but our preference would remain on the industrials and the consumer discretionary auto ancillary, that part. We also like certain segments of the material sector as well.
Right. So Shadri, I want to understand, the overall situation in the cement space. Now, there are 2-3 players, large ones, who are aiming at ramping up their capacities, even though the overall market is of overcapacity, and there have not been any material price hikes. In the last 15 years, our data shows that price per bag has hovered around 300 rupees mostly. And in fact, there is expectation of some consolidation. Clearly, these guys are seeing beyond 6 months, 1 year, 2 year, on a 3 to 5 year picture. And if this continuation of the government comes, the manifesto shows that huge domestic demand may be emerging in next 1 or 2 year plus because of focus on infra. How are you placed on cement in particular, and mid cap or large cap cements? Which side would you tilt on?
Thanks for asking the question. That's a very interesting one. We like cement, but with the warning that this is not a near term. Near term cement, short term cement stock cycles are driven by price appreciation, as you just pointed out. So we wouldn't play cement for momentum. We would play cement for a 2 to 3 year perspective for 2 or 3 reasons. One, as you just highlighted, the demand scenario, if you take a slightly longer term perspective, is strong. All the underlying drivers of cement demand, you're seeing huge government capex, which will continue. As far as private sector capex is concerned, real estate, is a sector that is doing well almost across the country. So that's another fillip to that. And while there will be some capacity additions, some of the larger players are looking at capacity additions. There would be some sort of consolidation as well. So if you take a 2 to 3 year view, cement looks, and the biggest reason is that if you're looking in manufacturing and you're looking at high quality companies with a strong track record, good balance sheets, then cement is probably one of the few sectors that gives that to you, right? High return ratios, good balance sheets, strong cash flows. Valuations are a challenge, but if you look at the longer term demand scenario and the longer term growth scenario, we would definitely keep an eye out. It would be a mix of both large and mid caps, because there's some mid caps which are coming through. We've seen some great turnaround stories over the last 10 years as far as mid caps are concerned. So we would keep an eye out on both large and mid caps. With the final, I would like to repeat the warning. It's not a near-term momentum sector. You would have to hold and be patient. But at these levels of the market, it is better to look at long-term stories which give you returns, with patience rather than look for momentum, because there is some valuation, richness in the market which may cap near-term performance.
Point. The other area I want to talk about clearly is aviation. Now, there are very few names in the Indian aviation space, but I want to talk about the dynamics. Now the reports are coming that some players are increasingly becoming aggressive in their international strategy, both outbound and also transitory, and are making big purchases and orders are being placed. In fact, an ICRA report today suggests that in the next 4 years, this could become, international routes could become 50% of their overall business. So some of the large Indian players. How are you placed on aviation as an opportunity, even from here on? Purely some of the dominant players on valuations. What are your thoughts there? Do you see structural case even from here?
Yes, it's a little counterintuitive because traditional thinking is that aviation is a terrible sector to invest in because you over cycles lose money. The vulnerability to oil prices is very high. But we are now in a different situation where there is high levels of consolidation in the sector. Smaller players, we saw one small player exit the market, and the other smaller players are struggling. And therefore, it's becoming a very consolidated market. That is one. Some of the top players, the largest player is also has achieved, great efficiency in terms of the way they operate. And thirdly, yes, you're right, international would be an opportunity. So, sorry, before that, demand is super strong. Post-COVID, everybody was skeptical of the demand bounce back, right? They're saying, this is a post-COVID revenge spending, but it is continuing very strongly. Both business and leisure to travel is going through very, very strong demand. And we think that structural, that will remain for the next 3 or 4 years. As far as international, yes, international travel will continue to pick up. And one trigger for that would be the Navi Mumbai airport, which comes in next year, because there are a lot of airlines which want direct flights out of the MMR, but are unable because the existing Santa Cruz airport is absolutely full up on capacity. So next year you'll see a massive number of flights come in. If you're a Mumbaiker, if Bangalore and Delhi have more non-stop flights, to the west than Mumbai does. that's capacity. So you will see a lot of capacity getting commissioned next year. So, short answer, yes, we remain very constructive on the airline sector.
What are your thoughts on the way last 4 days everybody got surprised by commentary from Dabur, Marico, Britannia, and stocks shot up? How is this pack looking on valuations and your thoughts?
Yeah, meaning valuations, if you look at history, are cheap. Though historical valuations, if you take 10 years, is very misleading in India because there was a certain paradigm in the pre-COVID world which has been broken. So a lot of those expensive stocks have derated for very good reasons. So I wouldn't go purely on historic valuations. Yes, these results are encouraging. As I said at the beginning, we had at the beginning of the year sort of penciled in a rural or a spending recovery in the must consumption end. One swallow, however, does not make a summer. We are not convinced that this is the turnaround. There could be a base effect in place as well. But we will continue to watch it closely, and it doesn't hurt to take some exposures to some exposure to this sector. Among the sort of consumption, etc., that space, we think that this is one area where one can take a little bit of an exposure, sort of an option value, see if it pans out, because downside risks are fairly limited.
Excellent. Thanks very much, Seshadri, for joining us on the show with your thoughts.
If you like this video, then like, share and subscribe to ET Now.